Good morning, good afternoon, and good evening, traders. I want to talk about why you should have a written trading plan. Written trading plan. If you are a starting trader, you should have a written trading plan. And here's why. Number one, if you have money to invest into a business, doesn't matter if you want to open a store, open a car dealership, open a company, whatever it is, wouldn't you want to have a trading plan to show you where is your profit margins? What's your cost? Is it a profitable business or it's a losing business? When and where can you buy your products, and when and where can you sell it? Let's say if you're in the business of selling Christmas items, you're not gonna sell Christmas items in January. So a trading plan tells you when to buy and when to sell as well. So let's move on to why you should have a written trading plan. I only brought this time, there's a million reasons for it, but this time we're going to discuss only 5 reasons for why you need to have a trading plan. Number 1, to create rules-based trading instead of emotions-based trading. Like trading based on feelings, it will never work. Because one day you're feeling good, one day you're feeling bad. One day you're feeling like you can read the market, one day you're feeling like you're completely disorganized. One day you have a headache, one day you're happy, one day you're sad, one day you're looking for revenge for whatever reason that's happening in your daily life, and a lot of people take that revenge into the stock market. One of the common, most important ones is when somebody hates their job, hates their daily job, and becomes a day trader. What he's looking for is a replacement for his daily job. So he wants to make the same exact money he's making on his daily job trading right from the start. And what happens is he takes a lot bigger positions, he gambles more, he's emotionally invested into the outcome of next trade. The next trade is the one that's going to get him out of his daily job, or is going to give him the hopes that he can make it as a trader and he can quit his job. He can just go to his supervisor and tell him to screw himself. That's emotions-based trading. Rules-based trading says my risk unit is $500. My maximum daily loss or maximum loss per trade is $500. That's my risk unit. My profit objectives is based on the risk to reward ratio. So if I'm risking $500, I'm hoping to make $1,000. And here's how you play it. The rules is I'm not gonna lose more than $500 per trade. I'm buying 500 shares, so I'm risking only $1 per share. So if it goes up $1, I'm taking 100 shares of my position. I'm locking in 1-to-1 risk reward ratio or 1-to-1 profits. If it goes to $2 in profits, I'm gonna get 100 shares of my positions, locking in $200 profit. If it goes to $3, I'm gonna lock $300 profit. If it goes to 4 or 5, I'm locking profits as it goes up. Yes, you might leave money on the table, that's fine. But at least you locked $100, $200, $300, $400, $500. You locked more than $1,500 on a $500 risk. That's a good trade. Matter of fact, we consider a break-even trade is a good trade. A 1-to-1 trade is a break-even trade, which is still a good trade. A 2-to-1 trade is really good trade. When you reach a 3-to-1 trade, you are a really good trader. If you can do a 3-to-1 trade, a 3-to-1 risk reward ratio on regular basis, you are solid. Number 2, to create consistency in achieving goals. Consistency. If you truly want to replace your daily job, you need consistency because your mortgage does not change. You need to make sure you're making this kind of money every single month. your mortgage does not depend on how emotional you are and how you're gonna pay it. Are you gonna pay more this month? You're gonna pay less. You are not gonna pay at all because you don't feel like it. You need consistency in profits. So if you use your risk to reward ratio 1 to 1, 1 to 2, 1 to 3, 1 to 4, 1 to 5, where are you taking profits is the most important thing in trading, in a trading plan. Number 3, to create another one. What's the keyword? Consistency. Consistency in limiting your losses. I'm not gonna lose more than $500 per trade. I'm not gonna lose more than $1,000 per day. I'm not gonna lose more than $5,000 per week if that's your risk units. If you're a small trader, a young trader, I'm not gonna lose more than $100 per trade. I'm not gonna lose more than $200 per day. I'm not gonna lose more than $500 per week. You have to have trading consistency. You have to limit your losses in a way that if you are not feeling good, if you're going through a divorce, if you're having fights with families, if you're having a bad day at work, you do not turn your account into zero just because you're having a bad day. So you have to have consistency in limiting your losses. Limiting your losses. Important. Number 4, one of the very important things that I actually suffered from in the beginning is, I learned all these technical indicators, and my mentor told me if this line crosses this line, you buy. It's an 86% chance you're gonna win, and I do. And what happens is it goes right down as I'm buying it, and I'm standing there just frozen because I never put a stop loss, right? At least not a hard stop loss, and I'm mentally frozen, hoping, praying, and wishing it turns around and makes me profitable. And I don't want to admit to myself that I was wrong, either in the setup or the entry or the fact that I did not put a stop loss. I just don't want to admit it to myself. So I keep looking at the screen. And sometimes because the pain is too much for me, I would just walk away from the screen. I would go do anything. I would look at my phone. I would watch videos. Whatever it is that I'm doing, I'm really hoping that trade turns around, makes me profitable. And it doesn't. 5th is to avoid errors due to fatigue. I can tell you most of my friends have daily jobs. Most of my friends do trade on daily basis. Most of them actually trading on cell phones. I think at a certain point, all these proprietary tradings and all these charts and 6 monitors and all this stuff is gonna go away. With technology, at a certain point, almost everybody's gonna be trading on their cell phone. There's no reason for 6 monitors anymore. So what happens is if you're having a bad day at work and you're trying to, just take a break from work and go trade on your phone in during lunch or in your car or something like that, that fatigue and all this stress that you have throughout the day is going to manifest itself on your trading. If you're having a bad day at work, you're going to take revenge into the market. And the market is not a good place for you to do this kind of stuff. A trading plan is going to protect you from your day. Trading a plan is going to protect you from fatigue. A trading plan is going to make you avoid errors that you usually do not do if you are in a good state of mind. I would like to invite you to join our day trading club at daytradingfans.com. Thank you.